You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
So hello and welcome to the China Shop. I'm shopkeeper Discount Dan, and with me as always is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
I'm doing good. Discount Dan, huh?
Yeah, exactly.
I was thinking D'Anthony, but I like Discount Dan better.
Yeah, I can't pronounce that. I struggle with my own name, let alone changing it up. So,
although Discount Dan suggests that you're not as good as Dan, and I don't know that Dan would disagree or agree with that.
Yeah, I don't know. Well, maybe I'm just coming in to take over. We'll see. Sorry, Dan.
Right. That's what I was afraid of.
Yeah, exactly. Well,
I came back. I had to check my chair, take it back from George.
Yeah, exactly. Oh, George is good as well. I'm actually talking with him next week, which is exciting.
Are you? Oh, I love having George on.
Yeah. So look, yeah, definitely. But yeah, Dan's in Ireland, isn't he? He's getting drunk.
Yes.
24/7.
Are you going to head up there and try to find him?
Yeah, well, I've already heard a few things coming. We'll see. Sorry, Dan.
All right, you excited?
Yeah, I'm so excited. Thanks for having. As I said before, I'm surprised you invited me back, and now you've invited me back for a third time. So,
is this third or fourth now?
It's actually fourth. Yeah, far out. You're suckers for punishment.
No, you're fun. We like having you on.
Oh, thanks. The listeners, on the other hand, but
I'll tell you when we get the numbers.
Yeah, exactly. It's like, why do they keep going down? Discount Dan. God damn it. But anyway, yeah, let's get into it. So everyone, come on into the shop with us today as we sit back, relax, and hedge against the rage machine. It's definitely raging this week with the markets.
Oh my God, yeah.
Crazy times. But welcome to any new listeners just joining us. We're here to smash our way through a complete set of fine china, sharing our ever-growing strategies for trying to maximize gains and cut your losses. I think you might have to start changing it to bears in the China Shop. I don't know. What do you think?
I was actually trying to decide whether or not I should edit the image for the cover art to have the bulls with their necks slit.
Whoa! I was just suggesting bears, not
really. The bulls seem dead right now.
Yeah, literally. It's like, put me out of my misery. I've had enough.
Yeah.
Definitely. But yeah, sorry, I've come in and already trying to change things. I'm taking over. Classic podcast host.
Right.
But yeah, if you're new to the shop, you're probably like, who the hell is this guy? But anyway, and stock trading in general, you can always check out our knowledge and resource centers on financialineptitude.com, or you can give one of our many beginner trading episodes a listen. We'll have all those in links in the episode description. They're with Real Dan as well.
Yes.
So yes. You're like, thank God for that. But I'm
gonna have to call him Real Dan from now on.
Yeah, exactly. Real Dan, Discount Dan, love it. But the best place to find everyone is in the Discord server, where Kyle and Dan, they get on there every day, and it's just a really awesome place to be. Though I have noticed that Dan's been slacking apparently, and he's just too cool for school. I'm sure you can guess who maybe suggested I say that.
Oh God.
Yeah, the real Dan. But obviously I can, as we've been talking about, I'm here to replace Dan. So Real Dan, you can stay in Ireland, no stress about it.
Oh man, yeah.
Yeah. So, but yeah, it's a free Discord server, and there aren't any paid tiers or special access areas because. Fuck that shite.
Exactly.
Literally. No one wants to pay for it. And then you pay and you're like, this is no better than free stuff. But yeah. We all have regrets. So we all get the regrets. I've had them where you pay for a course and you're like, what is this shit? I could get this on YouTube. Except for maybe some that we're going to mention.
Except for the free merch.
Yeah. If you private message either Dan or Kyle, they'll actually send you free merch. So it could be some swag straight from the shop. So we're glad you're here. We have a lot of fun and it's always better with friends. Kyle, do we have any show news to report?
Yes. We just finished speaking with Cody Willard, former CNN and Fox anchor, hedge fund manager, and the founder of the Skydle cryptocurrency. So that episode will be coming out on May 4th. And I believe there's still time to get onto their website and sign up for the free airdrop.
Well, that's cool.
After that, we have Matthew Morawski, a financial advisor at Goodstein Wealth Management. Then Flit Jameson will be there the week after that to talk about commercial real estate. If anybody wants to submit any questions for the upcoming guests, we do have a channel in that Discord dedicated just for that. And I need to update that with some of the rest of the guests. I mean, I think we're booked through into July now. I just started taking bookings for July. Schedule is getting fat. What do you got coming up for your show?
Yeah, I've got a few interesting ones. As I mentioned, I talked to George. I'm talking to George Papazov next week, so that should be up next Wednesday.
Nice.
I recently talked to a guy called Tavi Costa, who's like a portfolio manager at a hedge fund, and they look at commodities.
Mm-hmm.
So he's sort of looking at precious metals, and he's invested in quite a few miners. I also...
Graduation, hopefully.
Yeah, hopefully. I've got like 4 exams in 1 week coming up, so that's not going to be fun. That should be studying for, but yeah, graduation. I've got a job as well afterwards, which would be interesting.
Excited for that, to tell us what you learned when you start there.
Yeah, exactly. So we'll see what happens. I
send us their trading orientation material if it's got good trading information.
Yeah, I'll send you all the inside information.
Excellent.
That can't go wrong, can it?
Right. Nobody
wrong.
will expect us to do it over here.
Exactly.
They'll be looking at your London friends.
Yeah, exactly. Or whatever there. Yes, I got this guy, Nick Timoraios, who's actually the author of The $1 Trillion Triage, which is a book that Warren Buffett actually recently mentioned in his interview, saying he enjoyed it. And he's the chief economist correspondent at the Wall Street Journal. So I'll be talking to him. And another guy called Brian Feroldi, who's quite well known on YouTube, and he does a lot about sort of personal finance as well as stock picking. And
nice.
Yeah,
you got some good guests coming up too.
Yeah, it's exciting times, eh? Exciting times for everyone. You can all listen to our episodes.
What the Finance.
Yeah, What the Finance, WT Finance. Check us out if you like me. If not, then you can just dislike all my videos.
Click them twice if you don't like them.
Yeah, exactly. It still counts. It still helps the algorithm.
There you go.
Yep, awesome. So we've got lots of market moving news, especially this week. Plenty of stocks on the radar, plenty of earnings, and more options. Then the 8th bean in a 7-bean salad, because there's like 7 other beans to shag.
Sounds like a bean orgy joke. Yes.
Yes, exactly. This is what I come here to do. Bean orgy jokes. It's my specialty. I'm sorry. So reach out to us. We love your messages and comments on Twitter and Facebook, on our Discord. The link is in the episode description. Or if you're an old school, just send an email to 2bulls@financialineptitude.com.
That's the number 2.
Yeah. Or you can give us a call to 725-22-BULLS, BULLS.
Yes.
Very exciting. I'm going to have to start prank calling that. So maybe you've got a hot stock tip. Maybe you want to tell us about a great trade you just made. Maybe you are stuck in the outback in Australia and you come across Mel Gibson. Who knows? It could happen maybe 30 years ago, but it doesn't matter. We love to hear it when you reach out. And we'd be very impressed if that happens.
I gotta ask you a question then, since I got the Australian here and we're talking about Road Warrior.
Okay.
How much time actually passed between the first movie and the second and third ones?
I'm pretty sure they're within like days, aren't they?
That's what it seemed like. But in the second one, it's like he's in the middle of a nuclear holocaust. And the first one, like there's still people and towns and law. But then you get to the third movie, and like he meets those kids that are like survivors of a plane crash, and they're acting like it's been 20 years, talking about the long, long ago.
Yeah, I don't know. Yeah, and Mel Gibson looks the same.
Like, how long is this? How long is this arc?
Yeah, I don't know. I thought it was just a few days, but yeah, as you said, it's just like it doesn't make sense.
It seems like it's been like a long, long time.
To be fair, though,
it
does take quite a while to drive across Australia. So maybe maybe he was just driving and it took him that long.
Right. That's true. Oh, can we? All right. Do we have to do the bet? Can we just say that Dan won?
Oh. No, we got to do it. You got to.
All right. Fine.
I guess I'll take all the credit for Dan this week. If you insist, I'll take it. I did so much.
Well, there was a discussion over whether or not you should get to issue the consequences to me for Dan winning, but Dan waited so long for that. I think that would be cruel to him. It's been a while since he's won.
Well, what type of consequences? What can I do?
I mean, really, the sky's the limit. Just nothing that'll get anybody in trouble, really.
Okay, so nothing illegal, but other than that...
Yeah, pretty much. Anyway, so I tried to go long Bed Bath & Beyond because I was so far behind, I needed a meme stock to really take me up. If I had shorted that, I probably would have gotten pretty close to the lead, but I did not. Bed Bath & Beyond opened at $16.83, finished at $13.63, which takes me down to $393.58.
Didn't they stop trading Beds Bath and Beyond this week because
They,
there's like a potential buyout of a part of the company?
there was that was the previous week.
Oh, sorry.
That's why I grabbed him, hoping that maybe some news from that would happen. It did not.
No.
It just went down. Dan tried to go long SPXL. It opened at 97.93, and I think it hit a stop like day one. But because he's so far in the lead, doesn't matter. He finishes the month at $593.23. And Random, that son of a bitch, picked Reliance Steel and Aluminum. They opened at 190.11, closed at 198.04. Which took Random basically flat for the month. Finishes at $500.08. And that pick that it had too was actually up at 207 today, I think, before it came back down on the sell-off at the end of the day.
Wow. You know what this shows you?
Well, yeah, random chance is the way to go.
We should just throw darts at a dartboard. Why are we wasting all our time?
The worst thing too is that Random usually goes long. Like, how is Random going long on these fucking crazy bearish weeks and still getting winners?
Yeah, just getting all the value companies with the commodities which are going up like
It's
crazy.
insanity. So yeah, Dan. When Dan gets back, he'll have to issue some consequences, I think.
I'm looking forward to that.
I'm not. He's had a long time to stew on him.
Oh, really? So he's been thinking hard.
Yes, he has.
What would be your worst nightmare? What would be like the worst thing he could suggest for you?
I'm not saying that until he gets back and says them.
No.
Falling for that trick.
What's an example of one that's happened before? Maybe
I sent Dan the bunny suit from Christmas Carol and made him dress up with it for Christmas and take a picture.
Wow, this is great. I'm really looking forward to what Dan is. He's got like a lot of pent up revenge. It's like
I made Dan watch The Room with me once too. That was a pretty good one. One of the worst movies ever made.
Oh, that's good.
He did not enjoy it as much as I did. Yeah.
No, I love The Room. It's so funny.
All right.
But yeah, so it's time to talk about the. Oh, we already talked about
let's
that.
talk about the news. Let's get a song.
Dow drops deep on moving inflation, COVID frustration, war damnation. We're just bringing you the fucking news. You gotta recognize the game if you don't wanna lose. We're just skippy two bulls trading information.
Yeah, we are.
Rioters raiding, insider trading, taxes are raising, bills on the hill. We got a crypto mill. No, they ain't growing weed. When the Fed speaks today, it's some shit we don't need.
Sing it, Dan.
Two bulls trading information.
What?
Two bulls trading information.
I'm inclined to agree.
Two bulls trading information.
That is accurate. Very accurate. What information?
Let's talk about the news. So we've got Biden's new world with GDP going down in the US. So there's employment costs increasing with inflation. Russia threatening to cut off natural gas, and they already have in some countries. There's also been a winning streak from past highs, and we're also going to talk about our friends over in China. So Kyle, over to you.
Let's start with the GDP. Because I think that kind of started this sell-off, didn't it? The GDP declining. There was a little bit of a rally to start with it because I think some people were maybe expecting the Fed to pivot dovish because the GDP started to fall, but I don't know.
Yeah, I think it could potentially happen because obviously if next quarter, if the GDP drops again, then you're sort of in a technical recession, which is not what they really want going into an election.
Oh, really?
Yeah, so if you get two sort of decreasing GDPs quarter over quarter, then that's a technical recession. And if it's 4, it's a depression.
Oh, shit.
Yeah, so hopefully that doesn't happen. But yeah, so for anyone who didn't know, the US GDP, and I think it's just an estimate at the moment, but it fell by 1.4% sort of over an annualized basis. So it was like 0.35% for the quarter, which was quite surprising. They sort of were expecting it to grow by at least sort of 0.5%. So I think they were quite surprised. Obviously, inflation and other stuff involved as well.
I was going to say, it looks like Ian Shepherdson, the chief economist at Pantheon Macroeconomics, he seems to be of the opinion that it's noise, not signal.
Really?
Yeah, I don't know why. 1.4 is a pretty big amount when you're talking about the GDP.
Yeah, especially if it's like annualized for a year. And I think the thing as well is like the Fed are obviously they're putting up interest rates extremely aggressively. They're looking to reduce the balance sheet.
Right.
All these things are happening. You normally want to do that when it's going into a growing economy and things are strong. But obviously,
That would make sense.
yeah. But we know the Fed don't do what makes sense. They just do what they want. And I think it just shows that really they've sort of 6 to 12 months late in this whole process. And now they're trying to catch up. And
I think that's exactly what happened. I think they sat on their hands too long, and then now they just back themselves into a corner, and they really have no choice at this point with inflation where it's at.
yeah, but then you think about it, like what's causing the inflation is really supply chain issues. Obviously, lockdowns in China, the Shanghai ports closed. There's like 400-500 massive boats waiting off the coast that can't actually deliver or pick up products. Like,
Right.
all increasing interest rates is going to do is really just destroy demand and make people spend more on debt rather than actually spending it. So, I understand where they're coming from because people fear it, but I don't think it'll be good for the economy, as we've seen.
Do you think there's any chance they do pivot?
Well, if I sort of look at it from what the Fed are meant to do, their sort of main goals are sort of price stability and employment. So I guess the thing is that because employment's quite high at the moment, there's not much unemployment, and they're probably not going to worry too much about the GDP numbers. They're probably going to focus more on, trying to taper inflation. And if we do see unemployment sort of rise, then maybe they might be a bit more concerned. They might go more dovish. But yeah, and I think especially coming up into an election midterms.
That's the one that I look at. Like, I feel like this is just Biden basically saying that I don't give a shit about being president next term.
If he remembers what's happening. So I can say that I'm not from the US.
Yeah, you can. We've all thought it.
Yeah, exactly. He's a bit confused, but yeah, I don't know. I think they've tried to pivot like with a lot of the stuff, and obviously they mentioned forgiveness of student debt and all these things. So I think they are a bit worried about it all.
You mentioned employment costs, and there's something that I saw that caught my eye about the employment costs surging, which is stoking more inflation concerns.
That's interesting.
Trying to find the actual numbers here. The employment cost index, which is a broad gauge of wages and benefits, advanced 1.4% in the first quarter, which is the largest advance in comparable data back to early 2000s. And it also followed a 1% advance seen in the final months of 2021.
Wow, that's huge.
Because of this report, expectations for a 75-point basis rate increase at the Fed's June meeting has climbed after the release.
Wow, could you imagine? So if they did 2 75-point basis rates, we'd be at 2% interest rates in 2 months. If you can believe that.
Oh my God, that's crazy when you think of it like that.
Literally, like just straight to 2%.
May, I think Powell has already come out and basically said that May is going to be half a point, and I think there's been some other Fed members that we've heard speak that don't support a 75 bip increase yet. But I don't think that's not off the table for further along. It's just probably not going to happen next week.
Yeah, I think it's just how fast they're going. They're literally trying to increase it as quickly as possible until something breaks, and then they're going to like push it
right,
and then they're going to cut back again.
Part of this is saying that wages and salaries for civilian workers are up 4.7% from a year earlier, which is also the most on record. But they're still not keeping up with inflation.
Yeah, and that's the issue. And then like I've seen over here, like even looking for jobs, they're offering like thousands of dollars up front as like a one-off payment to try and get people into work. And I'm not sure how it works in the US, but yeah, I'm guessing, they're probably trying to do whatever they can, but increase the hourly wage. Because if you think about it, all those benefits are one-off, whereas the hourly wage is forever.
Yep. Bloomberg was quoted in here too saying, if productivity growth does not pick up and wage growth does not slow down, the Fed will likely need to hike by more than the 300 basis points the markets are currently priced in. So the markets are currently expecting 300 according to Bloomberg.
Do you think markets have priced it in though, since we've seen this massive drop off?
I think this drop off means that maybe they're expecting more now at this point.
Yeah, because if you look at a lot of the companies, like there's so many zombie companies that have so much debt, and this increase in interest rates is going to actually make their debt so much more expensive. So like, are they going to be able to survive, especially like a lot of the non-profitable tech companies, or, even some of the older manufacturing companies that have really just survived because of low cost of debt? So
Right.
I guess that's concerning. It's like when you get like a massive, or like one of those companies that sort of struggle to pay their interest or struggle to, might have to go into bankruptcy, then there'll be like a bit of concern, I think.
Right. And bankruptcy is always fun.
Yeah, exactly. Unless you hurt, then you can just make lots of money off it.
No, they I think they got struck down. They tried to do it, but the judge is like, "What the fuck are you
Oh,
doing?"
really?
Yeah. They're trying to issue shares on the price spike when they're in bankruptcy.
I love it. Why not?
What else we got for stories?
So I think we're talking about Russia as well.
What did they do now? They haven't invaded somebody else, have they?
No, not yet. Well, they are looking at the parts of Moldova, which isn't fun. But
I heard that.
yeah, it's pretty interesting though, because they're like a breakaway in Moldova, and they've basically pretended that the Soviet Union didn't fall apart, and they've sort of treated it like the Soviet Union. It's weird. But yeah, obviously you mentioned unfortunately Russia's in Ukraine, and they've also decided to cut off natural gas to both Bulgaria and Poland, because what they want is, rather than being paid in euros, which their contract says, they want to be paid in rubles, because obviously they've with
Right.
all the sanctions, they can't actually spend they can't spend the euros even if they're paid them. So they're like, "Not pay me in rubles." Poland and Bulgaria refuse to do that, so they have had their gas cut off.
That's kind of a fucked up thing, right? We're going to pay you in a currency that you can't spend.
What do you mean, like paying the Russians in the currency, or?
No, I mean, yeah, like the people trying to get they're trying to get supplied gas from Russia, and then they're trying to dictate the terms to Russia. Like, okay, yeah, send us your stuff, and we're going to pay you in this thing that you can't use.
Yeah, I know it is a bit weird, but sort of basically what's happened is Russia's like, okay, you opened a bank account with like Gazprom Bank, put your euros in, and then they'll transfer it to you for rubles. So they don't even really have to buy it; like transfers it to rubles, but Bulgaria and Poland are like, nope. And now, and they had their gas cut off. But I think what this was meant to do, because obviously they are big countries and they're important, but they're not like the biggest, not like a Germany or a France or Italy. So I think what it looks like is German companies and Austrian companies at the moment have decided to go ahead with what Russia wants, because they need the gas. Like it provides like 20 to 30% of Germany's whole energy production.
Well, actually, that's actually down now. In the last few days, I think Germany is now reporting that they only import about 12% of its oil from Russia.
Yeah, that might be oil, not gas.
Oh, gotcha. Okay.
Yeah. That's the thing, is like all these different. They rely on so many commodities. Like basically all the commodities come from Russia. But yeah, so that's important, I guess. If you're looking into Europe, and could this potentially impact growth over there? Could this mean that energy goes up all across the world? Because I know the US is exporting gas to Europe as well. But I think you're also mentioning oil, and you mentioned it then.
Yes, it's kind of the same thing. Like the threats of a oil embargo has actually been causing futures of oil prices to go up quite significantly, actually. I think they're looking at like a 6.2% gain for April at the time of this story, which I think was this morning. Oil was trading around over $1.06 a barrel. Most of the uptick, they're saying, is attributable to the increased probability of an EU oil embargo against Russia now that Germany has stopped opposing that measure. But that's what I was saying about the Germany importing less oil now. They only get about 12%. So that change in stance is basically because they managed to cut back on their dependence.
Yeah, definitely. I don't know how they're going to do it though, because I think the whole of Europe is like 20% of their oil from Russia. So it's like,
well, I know the US was trying to fill some of that gap, and I know that we released a lot of our strategic reserves to try to combat these rising oil prices, but I mean, it's already right back up.
Yeah, it didn't help too well.
On its way back up since we've done that. Yeah. and those the release of those reserves was something that's supposed to be like, every month, and not like a one-time thing either. So if prices are still going up, like that's not good for people who want to, drive.
Yeah, definitely. I think it's just I've sort of talked to a few people, and they're just saying that like the past few years there's been so much underinvestment in fossil fuels because of the green agenda. There's climate change issues, and there's 2020 when it went below zero. So now there's like, you can't really ramp up as you do. It just casually goes to negative like 100 or whatever. But yeah, like they can't actually ramp up the supply of it. So that's the risk going forward. It's like there's going to be these highest demands. Not everyone's going to want to get oil from Russia or maybe even Iran or Venezuela or all these countries that have it. So they're all going to be fighting over this finite resource.
I've always said that we're better off using everybody else's oil first. Might as well save ours for, when it runs out.
Yeah, you reckon?
I kind of thought that was our strategy with, depending on the Middle East for so long.
Yeah, I don't know. I don't think so, because the issue with that is obviously if they just cut it off one day, then you're screwed. Like you can't just easily ramp it up.
Yeah, that's true.
So yeah, I guess. But as you said, I think the US don't have that much reserve left. But who knows? We'll see.
I can't remember the exact numbers, but it was a pretty good amount.
Yeah, definitely. And I think we were talking before about like how China, they're in lockdown as well, and that's maybe ease the costs of oil because obviously their demand's not going to be as high.
Yeah, that makes sense.
But I think you mentioned something as well about sort of in China, how they're looking to regulate.
Yeah, I saw that they're actually sitting down with American regulators and trying to work out a deal to allow on-site audit inspections of the companies. This is we've been talking a lot about the threat of delisting of these companies for the last couple of years, I think. So we got to be getting close to that 3-year limit that they were giving these Chinese companies to be compliant. After we talked to Harold, he was kind of the opinion that these Chinese companies would probably end up pulling themselves off the U.S. markets and then trying to go back to like Hong Kong or Beijing indexes. At least for now, this looks like maybe they're trying to stay on the U.S. exchanges.
Yeah, I think so. Well, it's such a unique place, and he probably told you and I think I mentioned this before. Like Hong Kong's like its own place, and then mainland China, it's like quite hard for most people to invest there unless you're in the indexes. Like,
right.
So yeah, but I think. Have you heard about the coffee company recently? It's like
Luckin, the one that.
Oh yeah, It's Lucky Coffee or Luckin.
Is that the one that basically caused the problem? Yeah.
Yeah, exactly.
I think that's what kind of basically led to this whole thing.
Exactly, because they like faked all this profit as you do, and then it crashed. Yeah, so as you said, that caused that, and I guess their regulatory framework isn't as strong as other countries. But yeah,
I have a hard time investing in Chinese companies anyway, not just because of what happened with Loken, but also, if a CEO comes out and says something disparaging about the government of China, they can suddenly just scuttle massive billion-dollar IPOs.
Yeah, Jack Ma's still here. Where is he? Where's Jack Ma? Can you tell us? Has anyone seen him?
So yeah, I try to stay out of those for long term. I don't mind swinging them or short term plays, but there's just too much that can happen there. Too many unknowns.
Yeah, I agree. I'd say if you were to do it, you definitely want it to be a small section of your portfolio, just in case. Because Alibaba, like a massive company, has gone down by 70-80%, similar to Tencent. So
I bought that when it actually IPO'd. Back in, I don't remember how many years ago that was. I took the day off of work just so I could trade it. And I only finally sold it in the last couple of years.
That's pretty good, though. Did you sell it before it went back below its IPO price?
I sold it over 200.
Oh, yeah.
I sold it over 200. I was quite happy.
That's a good return. Well, now we've seen Twitter obviously go below its IPO price, and then all these other companies. It's crazy what we've seen recently. Twitter, we'll talk about that later.
Yeah, Twitter. We'll get to Twitter here in a bit, yes.
Definitely. All right. Should we get to the ad or anything else to say? Or
you want to do a funky segue to get to Sue?
Oh, yeah.
Speaking of Chinese company. No, that doesn't work. No, just go ahead. You can jump into it.
Speaking of an increase in interest rates, we'll go to... No, anyway.
Get those refis in.
Exactly. You got to get in quick before it keeps going up. So Two Bulls in the China Shop is proudly brought to you by Sue Pullen, at Fair...
Yes.
Shall I restart that? Let's restart that.
Sarah Palin.
Yeah. Two Bulls in the China Shop is proudly brought to you by Sue Pullen at Fairway Independent Mortgage, an equal housing lender. So Sue Pullen is a certified mortgage advisor who focuses on finding the right products for you and your needs. She has over 20 years of experience helping thousands of homeowners, whether it's purchasing, refinancing, or even a reverse mortgage. I don't know what they are, but okay. I'm sure they're great.
Don't be careful. She'll jump in on the call.
Yeah, sorry.
She did the last time Dan talked shit about reverse mortgages.
Oh, really? Oh, no. I don't think we have them in the UK, but yeah, please don't attack me, Sue. But she'll help. As they said, she'll tell you what's happening. She's licensed in 27 states, so reach out and see what Sue can do for you. The best way to reach her is to give her a call at 520-977-7904 or in an email at spullen@fairway at fairwaymc.com. Fairway Independent Mortgage has MLS number 2289. Sue Pullen has MLS number 206048. That email again is spullen at fairwaymc.com, and that phone number is 520-977-7904.
And speaking of, no, that doesn't, there's no, never mind. Two Balls in a China Shop is also proud to be affiliated with the Trade Pro Academy. Trade Pro Academy is an educational platform that offers institutional development programs to new and experienced independent traders. Translation: learn to trade like the big institutions. They have a great staff of highly knowledgeable and successful traders, and there's no better place that we found to learn everything you need to know to be a successful trader. And we know that because we've spoken to just about all of them. You can find them online at tradeproacademy.com, or you can use our affiliate link in the episode description. It's a great way to support the show and improve your own knowledge and skills. And when you talk to George next week, be sure you do not tell him that he gave us a 10% discount code to share with our listeners, because he has said multiple times that he never discounts his product.
Oh, really? Oh, no.
So we managed to sneak one by him, and I don't want him finding out anytime soon.
Okay, I won't mention it. What, you're saying he doesn't listen to the podcast? What?
I'm hoping he hasn't picked up on that and just skips the ads.
Yeah, maybe. Exactly. Like everyone does.
Yes.
Exactly. Except for these ones. But yeah, so on to the next one. So the Awesome Flurry and Leo, and those are some pretty cool names, not going to lie. But they're from Orderflow Labs. They're kind enough to share their toolkit for trading futures on Sierra charts with us. And they have some amazing custom studies.
I'm leaving that in.
Studios. Oh, God. For structure and execution. From buy and sell zones to exhaustion absorption detectors and everyone's favorite reconstructed tape, they have something for everyone. They're constantly adding and testing new studies, and they offer a lot of support to help use their tools. If you're trading futures, check them out at orderflowlabs.com.
And also keep listening. We should be recording a first episode of our series, Learning to Trade with Orderflow Labs, coming up at the end of this month.
That's awesome. Are you going to teach some people how to trade?
I'm hoping they teach me how to trade.
Okay.
And then everybody can follow along on that journey.
Yeah, maybe.
Start from the basics.
We need a story about Random.
Oh, God.
How he became such a great trader.
Random has his own Twitter now.
Yeah. He'll be famous soon.
Yep.
He's just the way of the world, no matter how you try. So,
Right.
as Random's been doing so well with his stock picking, let's talk about some stocks.
Excellent segue.
Stock time! Now it's talk about stocks time. Looking for setups, it's still not advice. Big moves, fresh news, and earnings. All that we're saying, it's still not advice. Stock time!
Please don't sue us. What do you want to start? We want to start with Amazon or Twitter?
Both pretty juicy at the moment. Maybe Amazon. Everyone's been talking about Twitter.
All right. Amazon is basically in the gutter right now. They got murdered on their earnings report that came out, I guess it'd be Thursday. They reported a loss of $3.84 billion, or $7.56 a share for that quarter. I think the expectation was somewhere around like $8 a share. Most of this loss, though, was because of their investment in Rivian, electric car company that we've kind of shit on in the past after they tried to raise prices for all the people who've been sitting around waiting patiently for their cars. But the crazy thing is that even if that loss wasn't on their books, they still would have missed earnings.
It wasn't even cost, was it? It was just reduced revenues from what I saw.
I mean, they think it's the pandemic and the war in Ukraine brought unusual growth challenges. Today, they're no longer chasing physical or staffing capacity. Teams are squarely focused on improving productivity and cost efficiencies.
It could be as well because it looks like they've halted to Russia, shipments to Russia, and cut off Prime over there. So I'm guessing that might have done something.
And they've also increased their Prime membership too, which they better learn from Netflix, because if they keep trying to ramp up costs and not continue to work on their product, then they're going to be in just as much trouble. All right, I mean, I guess they already are, right?
Yeah.
If you look at the price. Which, speaking of which, let's pull up that chart.
It's gone down by about 8% today, I think.
Let's see. They're down 14% today.
Wow.
That's today. So yeah, I had a pretty strong support at 2,700, and it looked like it tried to hold that going into earnings. Oh, they reported after hours. That's right. Yeah. So they bounced up in anticipation of that, but then they just freaking gapped down, ended up closing the week below 2,500, which is nuts. If I'm looking at the structure here, I mean, maybe there's a support somewhere around 2,430. If that fails, then oof, man, there's not a whole lot to hold this thing up if it doesn't catch around 2,300 until you get down to like 2,000.
Another crazy thing I've just seen is that it's just broken below the weekly 200 EMA for the first time since 2008.
The weekly EMA, you said?
Weekly 200 EMA.
Back then, it was trading at $31.
Wow.
Oh, wow. That is insane.
Yeah, I think it just goes to show that obviously it's just so many companies that are obviously Apple did very well the other day, but I think it's just the market, isn't it?
They've got a split coming up too. I think a 20-for-1 split, and we were really excited for that to happen because that means that this should actually be somewhat affordable now. So instead of paying $5,000 for a far out the money contract, actually afford to try to trade this. But if you're looking at it, I'd be looking at puts at this point.
Yeah, definitely. Yeah, I think it's just as I said, a symptom of the market and what's happening. But to be fair, it's like
To be fair. Sorry.
Be sure. I think their AWS is really what's holding it up, and their profits. You look at that company; it's just a beast. Like their revenues are still growing at 30%. So I think it's really started to become more of a technology company than the Amazon we all know of delivering products and stuff. Because even though that's like high revenues, it doesn't have much very high margins at all compared to AWS.
Mm. You say that you think they're becoming more of a tech company, you said?
Yeah, well, I don't know if you know, they like, so Netflix is hosted on like AWS, so Amazon Web Service.
Oh, no, I did not know that.
Yeah.
Oh.
So basically they're like the cloud computing. So they basically manage most cloud computing in the world, like 30% of it, I think.
So they have a massive data center presence in.
Exactly. So like, I don't know, I think Disney and Netflix and basically all the massive companies host on. They used to be all on Amazon, and now they've sort of Google and Microsoft have come in and taken some of the share, but they're still the biggest at the moment.
I used to build those data centers or help commission them.
Oh, really?
Glad I don't do that anymore.
Bit complex?
No, just I don't like being a contractor.
Oh yeah, I can imagine.
Yeah, you don't get treated nearly as well as you do as when you're an actual employee.
Oh, I can imagine. So true. Do this, do that. Stop slacking.
We want you to wear gloves even when you're typing at a computer. What? That's retarded.
Take that.
I don't care. You're a contractor. Do it.
Really? That's so ridiculous.
Yeah, it's stupid shit like that.
Yeah.
Anyway,
They don't let you look at the charts either.
No.
Bastards. So Twitter, I think, is next, is it?
Twitter, yes. They've been in the headlines after Musk and the board did agree to the buyout. But the story that I wanted to talk about was how Musk has apparently already broken his agreement, and it's like less than a day into it.
That's pretty good, though. He made it a few hours.
Pretty good for him.
Yeah, exactly.
So there were specific terms in the merger that was signed that says that Musk was not supposed to tweet any disparaging comments of Twitter or any of its representatives. Twitter also was supposed to be able to pull out Musk was supposed to be able to pull out if Twitter did something stupid between now and when the deal closes. But yeah, so let's see. On the 26th, there was 2 separate tweets that could have been considered disparaging, and it's not even the ones where he was talking about paying the board $0 when he gets put in charge. One of them was the referencing a story about Hunter Biden, the laptop that Twitter banned.
Oh, damn.
He said suspending the Twitter account of a major news organization for publishing a truthful story was obviously incredibly inappropriate. And then he also alleged that Twitter lawyer Jim Baker, former FBI counsel, facilitated fraud. Responded to a tweet by saying that sounds pretty bad.
Didn't he say as well, like when they were banned Trump, that they shouldn't have done that? Like the lawyer he's like had a go at the chief lawyer.
Yeah, I think that's what this was.
That's that one. Yeah,
he just can't help himself on Twitter. Like
he's attacking everyone, isn't he?
I see why he wants to own it.
They can't shut him down.
Well, not only that, I mean, I guess if you own Twitter, maybe you have a little more checks and balances for when you try to piss off the SEC. Maybe that's what he's hoping for.
I don't think so.
Because it seems to be like that his main tool for instigating, and it really feels like he just likes to poke at the SEC and anybody he wants, really, I guess, right?
Yeah, well, they're going after him again for the that tweet about him selling all his Tesla shares, 10% or whatever. I don't know if you saw that, because apparently his brothers like sold some before that happened.
Yes, and his brother has had some incredibly lucky streaks when it comes to selling before dumps.
Yeah.
Like, he's got to be a really good trader.
Yeah. It seems a bit dodgy, doesn't it?
Yeah, it does. Twitter is still holding pretty well. I guess the buyout price was somewhere around $54.20, I think.
Yeah.
Twitter's trading at, I think it closed right at 49. So, I mean, it's still got some room to go up to that final price. But, I mean, that's assuming that this deal actually happens. And I think maybe now the market's starting to price in some expectations that maybe something stops it from going through.
Yeah, definitely.
I was liking this as a short stock until Elon came out and tried to buy it. And that's, I think I actually fucked one of my trades.
Oh, really?
Yeah, it came right up into a support at 40, and I was just like, okay, I'm short in here. And then like the next day, like the news comes out pre-market, it shoots up $8. Still got a nice gap to fill down there, but it's right at a support at 48.5 to 49. It is also below its 200-day moving average, but I think just about everything is right now. I don't know. There's a whole point in analyzing this. This is just a play. If you believe the deal is going to happen, then buy it. If not, then short it, because if that deal doesn't happen, it's going to fill that gap down to 40 again. And probably go lower than that.
Yeah, I think, to be fair, though, they did beat their earnings, surprisingly.
Yeah, they beat their earnings per share, but their revenue was a miss.
Oh, yeah.
They missed by about 2%.
And they had this thing where they counted like 3 million more active users a day or something.
Oh, so they're still growing?
No, well, they actually miscounted it. So they overstated it somehow, yeah. I think if people have like multiple accounts, so if you were managing your own account plus 2 people at the China shop, they would count that as 2, even though it's really only 1.
That sounds like something they would do. Well, do you have any stocks that you want to look at?
Yes, so I'm taking us across the pond to France, actually. So
Paris, huh?
yeah, Paris. That's as far as my French goes.
Me too.
We're very sophisticated people on this podcast. Dan must be the French speaker, obviously. That's why. But yeah, I was actually talking about GTT, which is called Gaz Transport et Technigaz, which is listed on Euronext, which is the European exchange, and it's currently trading at 114.2. And what it does is quite interesting. It's quite a unique sort of opportunity, just what's happening with Russia and gas and oil, gas at the moment. So for anyone who doesn't know, most of European gas comes from Russia through pipelines, which is very efficient. It's a lot easier. But obviously, Europe's trying to transition away from Russia due to the conflict. So they're actually started to use more ships. So people are actually importing through shipping from the US, from the Middle East, from other parts of the world, Australia as well, to Europe. And it's quite hard because obviously liquefied natural gas, it's got high pressure, it's very unsafe to carry. So this company actually you don't want to have an accident with it, but yeah, this company, they actually designed the storage tanks for these ships to hold the liquefied natural gas, which is really interesting. And they basically have like a monopoly on it. I think they have like 40 or 50%, maybe not a monopoly, but maybe duopoly. They have a majority of the market share for this specific technology to provide it. So it's
really,
yeah. So I think it's gone up by quite a lot. It's gone up by sort of 100% since the war broke out, and I could see it going up further as sort of Europe looks for other sort of exporters to provide their gas and their energy.
I'm looking at the chart right now, and I love the way the volume on the green days is way higher. It's almost twice as high as the volume on the down days. And it's still holding strength even with everything else kind of going to shit. I'm not sure what the Paris markets look like in general, so I can't really speak to that. But seems like it's trying to consolidate up here at a kind of a flaggish pattern. I have a support around 102. That looks like it would be a good aggressive spot to try to get in if it comes back down and retest that. Otherwise, there's a really strong support and volume profile ledge that kind of starts around 92.
That's interesting.
Volume on the whole does seem to be decreasing, so that this move might be starting to run out. So I would try to look for a retrace before I try to jump on board.
Yeah, definitely. And it's a dividend stock as well. So it's coming up dividend on the 6th of June. So I'm guessing normally sort of stocks go down into dividends.
Right.
So that might be a time where it goes down a little bit. But it has had quite good support on sort of, if you look at the 4-hour 50 EMA, it sort of bounced off that quite regularly sort of since last year.
Right.
And when it did break that, it sort of bounced off the 200 EMA.
I really like the strong buying that came in when it dipped down to 105. You can see they closed that candle pretty quickly.
That's a long wick, isn't
Yes,
it?
it is.
Very long. But yeah, so I thought it was just something interesting, a bit different in a different market. But yeah, it could be a good play. Maybe not for for this week, maybe for a bit more long term.
Yeah.
But yeah.
I want to take a look at Altrera Group, which is a stock that I've held in my portfolio for a long time. MO. I think some of our Discord users like this one too. At least I know Baron really likes it. They just reported their earnings the other day and still managing to hold near their highs, which is pretty impressive considering the day that, the markets had, or the week the markets have had. Came down into support around $53, $54 the day of their earnings, and then it's pretty much bought right up off of that. It did get rejected pretty hard off of 57 today, which is not surprising. I'm actually more surprised that it pushed up there at any point. But this is one I want to keep an eye on because anything that's showing strength in this market is something to kind of keep an eye on, especially if it can break those tops. And that is not an all-time high. That would be a 52-week high. It's reversed its structure from its decline that started back in 2017. But if you like dividend stocks, this is one that pays 6.5%. So this one's been a really good dividend stock for me over the years.
Yeah, wow. What does it do?
It makes cigarettes.
Okay.
And if you're trying to invest in something that's probably recession-proof, cigarettes probably be one of the ones.
Yeah, definitely.
I think they also make vape sticks and other things now.
You sinner.
Oh, Altria did used to own Kraft. Okay, they spun off their stake not too long ago, 2016.
Wow, that's crazy.
Isn't it? Who would have thought a tobacco company would own like Kraft dinner?
And everything. Yeah, got to diversify your position.
Should have held on to that. That was a good.
When they were shilling that their cigarettes are healthy, that's probably what they did. Like,
Right.
come on, we gotta invest the money.
Yeah, so I'm watching this to see if it can break up above 57 because I think if it can do that, then maybe we can work our way up into the distribution, up into those 60s.
Yeah, well, I think the market's probably, as you said, it really benefits the companies that are making, positive cash flow, that are making, actually have money and probably low debt as well.
And also things that people aren't going to cut when they look to cut expenses. People cut, their Amazon Prime membership, but people who smoke aren't going to suddenly stop smoking because of the cost. They're going to make that decision for health reasons or something else maybe, but the price isn't what's going to do it.
Yeah, to be fair, I think you keep mentioning Amazon Prime. I said it again. I think Amazon Prime is probably stickier than Netflix or Disney Plus.
Yeah, Dan and I had this conversation not too long ago about Netflix being like the first on the chopping block of all the services. I like the products that Amazon puts together for their streaming services better than I like the Netflix ones.
Yeah, and I think the benefits it provides as well. It provides obviously
Right.
next day delivery.
Yep.
All these other things as well
Mhm.
that I'd never use, but apparently I can use, but I never use.
What's really nice too is when you delay those and say, "Oh, you can just ship it whenever and give me, a few extra dollars to spend on something else."
I've never had that. I don't know if they do that over here. Maybe they do, and
Normally it's a checkout option. At least over here it is.
yeah, I don't think
Like
so.
if you have 3 items, you can say, ship it in one box and I'll take like $2 to spend on this marketplace.
They're stealing money from me. That's ridiculous.
It's from you.
Why haven't they told me? Yeah, from me. Yeah, so I think it's a bit more stickier, but I agree. I think, as you said, Netflix is definitely really struggling.
Netflix is dead.
I don't know if it's dead. I think it's still got a good offering, but yeah, they just don't make very good products, like shows.
No.
Good enough shows.
Not only that too, they're also trying to crack down on password sharing. That's really what's going to kill them if they try to do that.
Yeah, definitely. Yeah, I don't pay for Netflix.
Right.
I use someone's password, so I am screwed.
Yep.
Netflix is going to come for me. They'll knock on the door.
I think we should move on. I think we should talk about crypto.
I got some crypto in my wallet, hanging out on my Ethereum blockchain. Yeah, I got some crypto in my wallet, some Doji, Sushi, Polka Dot, NFT, decentralized, anonymized, fabulous cryptocurrency.
So yeah, let's talk about some crypto. So there's been a few interesting sort of things on today and the past week.
Mm-hmm.
Unfortunately for any crypto bull, Jim Cramer,
Oh no.
the inverse indicator. So he has actually said that he thinks Ethereum is going to go up by 40%.
Oh shit.
Yes, unfortunately, if anyone has been watching Jim Cramer, he's been very wrong. Probably the only person who's been more wrong maybe is Kathy Wood over the
Oh my
past
God.
few months. But yeah, so he basically thinks Ethereum's going to go up by 40%, and it's probably not a good sign. And then another thing that we were looking at as well is there was actually quite a big hack for one of the biggest NFTs. So Bored Ape Yacht Club, which sounds pretty stupid, but they're worth some of them are worth hundreds of thousands up to $1 million each for these ape figurines or characters.
Huh.
And a hacker sort of hacked into the Instagram, the Twitter, and the Discord for sort of the company.
Mm-hmm.
Posted this link. People went on there and they connected their wallet to it, and they lost all their NFTs. So they actually were able to steal millions of dollars of it.
So how does that work then? Because I mean, they can't, like, the people who stole it won't be able to like sell it, right? Because those should all be like unique. Like I thought that's the whole point of an NFT was that they're like there's a blockchain that records every transaction, so they should know exactly what wallet it went to, shouldn't they?
Yeah, so they do, and I guess for NFTs they should be able to track it, so it shouldn't be an issue. But I guess it's like, haha, I stole your NFTs, I stole your pictures. But yeah, so I don't know the benefit of it, especially for such a big one. Maybe if it was a smaller one, you could probably get away with it.
Right.
But it's one of the largest. It's got like this largest market cap. It's got the largest volume of NFTs. So yeah, as you said, it's probably unlikely to do that. Whereas I guess they may have I think they stole some crypto as well. So with that, there are ways to sort of get around that, which I probably shouldn't talk about on.
Oh, I was going to ask you how, but
well, there's actually something called a tornado, where I think it's with Bitcoin. You can actually transfer your Bitcoin into it, and it just sort of like welds it around together, and then you can withdraw your Bitcoin, and it's like a completely different token, and it's just randomized.
Okay, so it's basically laundering money for a tool that's used to launder money. I mean, it sounds like a washing machine for crypto.
Yes. It's basically a washing machine. Don't use it. It's probably illegal.
No, I'm sure it is. And this is why the government wants to regulate.
Exactly. And I guess these are the bad stuff, like 99% of people are doing the right thing with crypto. Maybe a bit less, but at least 90% are doing the right thing.
Maybe even less than that.
Maybe less. No, I think there's a lot of good people.
There's a lot of good people.
But yeah, I guess
there's a lot of shitty people too.
Doing bad things. Exactly. But yeah, so that's sort of what's been happening in the crypto markets. In terms of the price, is sort of quite correlative to the NASDAQ. So I think what we've seen over the past few years is quite a lot of institutional investors have come in. So basically it doesn't move that much different. It's sort of got like a 60% correlation to the NASDAQ. So yeah, so it's got a higher beta, which basically means that it will move at a greater range. So if the NASDAQ goes down, it will go down more. If it goes up, it will go up more. But yeah, they're quite correlative in their movements, which is pretty interesting.
What about the correlation to inflation? Because I think back when we first started the show, like the thought was that Bitcoin and Ethereum crypto would basically replace gold as the inflation hedge. But I think as we've seen over the last year, that may not necessarily be the case, or it's probably not the case.
Nothing's done well with inflation, has it? Really?
I guess not. I mean, how's gold done?
It sort of went back up to its highs seen in 2020. But that's the thing. It's like it was already there before inflation occurred. So
right.
I think it's. I talked to someone who was talking about a precious metals super cycle, commodity super cycle that he thinks could be coming up soon. But yeah, but not yet. But I think what people have been saying is it's more related to liquidity in the markets. So if there's not a lot of liquidity, then people will go to gold.
Right. Okay.
As a sort of a safe storage.
Right.
But especially if that's in sort of treasury markets and bonds and stuff. But yeah, we haven't really seen the inflation hedge that people probably wanted.
No, not at all.
Unfortunately, yeah, it's just sort of been like it's almost like a more risky stock investment, basically, the crypto. But yeah.
I got to look at Ethereum too, real quick now that Kramer's calling for.
Oh yeah, let's have a look.
Actually, Ethereum's kind of interesting. If it holds around 28 to 2,700, if it holds there, it'd be holding for a higher low. The structure actually maybe looks a bit bullish which is kind of surprising.
Yeah, so that could be really interesting.
Obviously, it's down quite a bit from its highs of almost 5,000 back in the end of the year last year. But since the end of January, it's got a bullish structure, higher highs, higher lows.
Yeah. I think what we normally find is it'll be like Bitcoin will lead and they'll lead the sort of crypto market, and then Ethereum will lead. It almost like swaps back and forth, which is interesting. So like one will go up a lot, and then normally what you'll see is in the next few weeks or month, the other will go up a lot and sort of catch up.
Oh,
it's quite fascinating.
Maybe something to watch if you're trading. Look for catch-up plays, huh?
Yeah, exactly. But you're probably you're the expert on technical analysis. So.
Well, technically, Ethereum actually doesn't look terrible, which I was actually kind of surprised. I thought I'd pull up this chart and it looked like murder, like the rest of everything.
Yeah, I think Bitcoin looks pretty similar as well, but they've sort of just been going sideways the past few weeks and months compared to the market.
Yeah, Bitcoin's similar, holding higher lows. I mean, Bitcoin looks a lot more in danger of breaking structure than Ethereum does, but structurally, it seems like it's ever so slightly bullish.
Yeah, we'll see. Well, talking about ugly charts, let's go to the good, the bad, the ugly.
All right. Pew pew.
So what does that mean again? I go first. Or you go first?
I'll go first.
Okay.
Since you're not necessarily trading actively every day. My good for this week, I think, was trimming my BMY calls right before their earnings. Got a nice little pop leading up into the earnings. I had trimmed about 50% of my contracts before to lock in some nice profits on it. Still holding half my position going in. I was debating whether or not to try to gamble on earnings, and then looking at the charts, I'm like, this thing's already near all-time highs. Like, why am I taking the risk here? Closed out another quarter of that position, left the rest as runners, but that made the trade basically free money. I was able to hold a couple contracts into the earnings to see if something magical could happen and not actually cost me any money. The bad was that I didn't trim more because earnings, when a stock is sitting near all-time highs with earnings coming up, very rarely does it seem like it ever shoots up more at that point.
Oh no,
that's usually an indication it's about to drop.
So the magic didn't happen then?
No, the magic did not happen.
Oh no.
They are May dated calls, and I still like BMY for like the long term, but I could have sold them out, bought them back, pennies on the dollar at the open on Friday, but let the greed get to me. And then my ugly for the week was really like my last week of trading this month. I had a decent Monday, made a little bit of money, but kind of went downhill from there. The good news is that I did stop after Wednesday. Thursday and Friday, I was just practicing my futures trading on Sim. But I think what ended up happening is getting close to the end of the month, and you start thinking about all the bills that you got to pay. I mean, you're trying to rely on this for income, and you haven't had like a great month to start with. Like I was pretty much flat for the whole month. And now I'm thinking about, everything I got to pay and the drawdown that I'm going to be taking. I think that had a much bigger effect on my thought process and my actual trading than I thought, because I was, looking for too big of moves rather than scratching or taking, just whatever the market was willing to give me. I was trying to push for some of those bigger wins to try to have just a good end of the month.
Yeah, I think that's the issue sometimes when it might not even be the money. It's just like almost a pride thing, isn't it? You're like, I want to end on a good note or something, or I want to,
right. Yeah.
That's what I found.
Sometimes when you're trying to cut something early, like that's you admitting that you're wrong, and sometimes that's really tough to do.
Yeah, exactly.
Then you have to take a step back though and remember that this is a game of probabilities, as we've said before. Like, you're looking for a 40 to 50% win rate. Like that's what the best traders do. And then it's all about risk management.
At least you weren't Bill Ackman, who lost $400 million in a few months.
Yeah.
Look at the positive.
It's definitely positive. Did you do any trading this week?
So no, not at the moment. For anyone who doesn't know, I used to be like quite into Forex trading, and I look at equities more at a long-term basis now.
Mm-hmm.
I sort of graduated uni, so I want to get into it later on. But I was going to talk about a company that I actually mentioned that I liked last time I was on the podcast, called Ocado.
Oh, yeah.
So OCDDY. Last time I was quite rude and talked a lot about ugly children and about how the chart resembles ugly child that maybe will blossom into someone who is better looking when they're older, and that hasn't happened yet. They're still
Nope. They're still at the orphan age, waiting to be adopted.
yeah, exactly. Giving everyone the puppy dog's eyes, but no one's biting, unfortunately. So yeah, so it's gone down even further. I think we were talking then that there was a good support at about 26, which was the 2020 lows, and it's actually gone below that. So it's gone back down to where it was in February 19.
Mhm.
And I guess the risk there is maybe because they do have quite a lot of debt. So will the cost of the debt, will they be able to survive through that period? But I think they'll be okay. And it has just bounced off that pretty solid support at sort of $23. So it'll be interesting to see where it goes from here. I think obviously if the market keeps going down, it's like anything, it's just going to probably go down further because it's more of a high risk stock. But yeah, we'll see what happens. This is more of a long-term play just in terms of AI and algorithms, and they just sort of do fulfillment centers for supermarkets. So it'll be interesting to see how it all goes.
So what was your bad was your hot take the last time?
Yeah, my bad was talking about ugly children. Don't do that. It's not nice.
Yeah, you owned it.
Yeah, exactly. I tried to.
It'd be really easy to just never bring that up again.
Yeah, exactly. I'm just digging the hole even deeper.
Right.
I'll get to the US soon at this rate.
There you go. All right, time to wrap things up with a bet.
Yeah.
I need it, wanna beat it, gonna win it if I take it from you. I'm filling my positions, quit your bitching, random's gonna lose. Got a chart full of levels and a stop that's not too tight. It's bet picking time in the shop, so pick 'em right.
So, what company are you looking at?
Well, I think I have to go with MO Altrera. I keep looking at this chart and I'm like, I like this. I think I like this.
Why are you encouraging killing of people?
I mean,
sorry,
I'll invest in defensive stocks. It doesn't matter to me.
Yeah.
I have no morality when it comes to investing.
Maybe the money. No, it's interesting.
Yeah, no.
So,
yeah. So I think I might try along on this. I'll do it this way though. I'm gonna go half in at the open on Monday, and I'm gonna save my other half to add if it gets back to 54, and then I'll put my stop loss at say 52. I think that looks like a decent area. If it drops below 52, I'll just admit that I'm wrong and get the hell out.
Yeah, that's above the daily 50 EMA as well, so that could be a good support.
And then if I want take profits,
it was below. Sorry, yeah.
I think we'll just we'll do a take profit at 60.
Going to blue ocean territory. Don't know. There's no price information.
No. There's if you go back to 16, it was up there before. That's kind of right in the middle of the distribution range. I figure if it gets up into that range, then that's a decent area to try to peel it off.
Mine keeps saying it's at the all-time highs.
No, 52-week high.
Oh yeah, it sort of just bounced off it, didn't it?
Yeah, all-time high is at 70, just below 78.
Oh, I must have the wrong chart up. But yeah, anyway.
You got to zoom out to get to that far.
I'm zooming. Well, I'm going to step in for Dan. So sorry, Dan, if it absolutely destroy your record. It'll be a good start to the week anyway.
Yeah. What are you going for?
So I was looking at Spotify, actually. Shopify, sorry. Not Spotify. Shopify. Yeah, which has been doing very poorly. It's down over close to 70%, I think, over the past 5-6 months, which is pretty crazy to think. And I am obviously going to do a short. So I'm looking at probably about 500. So at the moment, the price is at about 424. I think it's going to potentially bounce back up to 500. So I want the short to be from there. And I think my price target would be, I don't know, it could go down so far, but I guess even just 360 is like a pretty good return.
If you're shorting from 500 to 360, that's really good.
That's really good.
Take that and run.
Exactly. So that's what I'm thinking. Probably the stop loss would be, so I'm in at 500, probably stop loss about 550. So I guess that's the thing. It's going to be a bit, maybe a smaller amount of in the trade, a bit bigger stop loss just because it's such a highly volatile stock. So want to hedge my risk there. But yeah, should be interesting. It's still sort of a 2.8 risk reward ratio.
Yeah, I like it. I like it too because it has earnings and can go either way. So Dan could either be out of it. Dan's going to be either running away, winning, or out of it by the by Friday, I think.
Yeah, it'd be interesting. To be fair, and I said it again. I do like the company. What have you done to me? I really like the company, but yeah, it's just a horrible market and a horrible chart.
Well, going short's probably the way to go.
Yeah, definitely.
All right. Should we see a random stock?
Yeah. Random, what you got?
All right, random has Golar LNG Limited, GLNG.
When does the robot voice come?
What's that?
We need like a robot voice for random.
Oh, right. We can get a filter for that.
Yeah.
How does random do this? I don't understand. Like, it's grabbing a stock that's like on just a beautiful bullish move that's also happened to pull right back into the 3450 EMA cloud, which is like the spot that you want to get for pullbacks. Fuck random. I hate random.
Go away, random. Why did we even start him?
Damn it. This stock looks really good. I might actually just pick up some calls on this Monday at open.
Yeah, I guess that's a good thing. At least you're spinning the wheel and seeing.
I might as well make some money on random while he's kicking our ass.
Don't jinx him like that. Come on.
All right, what is this? GLNG. Oh, man. All right. You made it.
We made it to the end. Thank you for putting up with me for
thanks for filling in. It was actually a lot of fun.
Yeah, no problem. Thanks for having me. 4th time. I can't believe it. So gonna have to come back for the 5th. Yeah, I don't know. We'll see.
What's the plan for the next one?
If you want me back.
Well, now we got to do a 6-part trilogy, right?
Oh, God. And then we have to do the 9 and then...
Yep.
So what would we be? Would we be like a Phantom's Menace now, or would it be a?
Oh God, no, we're
just
skipping that whole series. This is the new Jurassic Park, so I enjoyed those.
Exciting times. So yeah, all right, folks, that brings us to the end of the episode. So thanks for coming by, but we're closing up the shop. Get out. No, sorry.
No, perfect.
I'll be like one of those retailers who just like stands at the door, like staring at you, like get out of my shop. I want to go home.
Just suspiciously eyeing teenagers for no reason other than profiling.
Locking the doors. It's like, if you don't leave now, I'll lock you in. But yeah, we'll be back with you soon. And until then, happy trades. And you'll have Dan back after. So
no, next week we got Sarah Glass filling in.
Oh, Sarah Glass, exciting times.
Mm-hmm. Yep, another Trade Pro alumni.
But anyway, thanks everyone.
All right, bye folks.
We all have that friend who wakes up early to go get everyone McDonald's breakfast while the rest of us sleep in. This is your sign to thank them. And if you're that friend, this is us saying thank you.
Now get a sausage McMuffin, sausage biscuit, sausage burrito, or hash browns. Choose 2 for $2.50. Enjoy a large iced coffee for just $2. Price and participation may vary. Cannot be combined with any other offer or combo meal. Single item at regular price. Ba-da-ba-ba-ba.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.